Problem 1-45, we're going to correct a balance sheet. So the bookkeeper of Outdoor Life Landscaping prepared the company's balance sheet while the accountant was ill. The balance sheet contains numerous errors. So here's a balance sheet, by the way. So this balance sheet here contains numerous errors. In particular, the bookkeeper knew that the balance sheet should balance, so he plugged in the owner's equity amount needed to achieve this balance. Now this part is critical. The owner's equity is incorrect. So this amount here, $19,150, is just totally incorrect. We can't use that at all. All other amounts are correct, but some are out of place or should not be included in this statement. Prepare a corrected balance sheet. If a box is not used in the table, leave the box empty. Do not select a label or enter a 0. All right. So you'd probably be surprised how often this happens. People screw up financial statements and bookkeeping and accounting in general all the time. They think they know what they're doing, so they try it on their own, and they mess things up, and then they hire someone like you to come in and fix it. That's why accountants and bookkeepers always have jobs. Let's look at the 3-line heading. Outdoor Life, balance sheet, month ended. So is this correct? Is the 3-line heading correct? Well, the top line is always the name of the company, and the second line is always the name of the statement. But how about this? Is this correct? No. This should be a single day, November 30th, 2024. This says for the whole month of November. By saying month ended November 30th, they're saying for the whole month of November. So that's wrong. Since these are balances, it has to be a single day. All right. So now let's work on the asset section. So should cash be here? Is cash an asset? Yes, that's correct. So he got that right, at least. Now, how about office supplies? Is that correct? Yes, that's correct. $600. That is an asset. Office supplies. And then land is an asset. I don't know why it's only $34,100. It's really cheap land. And then salaries expense. So, should salaries expense be on the balance sheet? Let's review our formulas for the financial statements. Where do expenses go? Expenses go over here on the income statement. They should not be on the balance sheet. Look at the balance sheet formula. It should be only assets, liabilities, and ending capital. There's no revenues, there's no expenses, there's no draws. Just assets, liabilities, and capital. So, we're going to skip salaries expense because expenses do not go on a balance sheet. Next thing, office furniture is an asset. So copy and paste that. And then notes payable. Well, why did this person put notes payable as an asset? Notes payable is a liability. So we have to, well, since we're here, let's move this notes payable over here to the balance, or to the other side. Notes payable. All right, then we got rent expense. Remember, expenses go on the income statement, and this is the balance sheet, so we need to ignore that. Then we've over here in the liability section, we've got accounts receivable. So is accounts receivable a liability? No, that's an asset. So we need to move this over to our asset section. Accounts receivable. And notice next we've got withdrawals. Do withdrawals go on the balance sheet? No, they go on the statement of owner's equity, so we have to leave that off. And since we're here, service revenue, where do revenues go? Revenues go over here on the income statement, so we're going to leave that off. Property tax expense, that goes on the income statement, so we're going to leave that off. And finally, we got accounts payable. So accounts payable, at least you got that right. Accounts payable is a liability. Now traditionally, accounts payable is listed first. it's bugging me that accounts payable is not first. Well, anyway, we'll leave it there. In the real world, you'd want to put accounts payable first, and later on in the quarter, you'll find out why. All right. Now, so it looks like we can now add up the assets. So if we add up 4,600, 634, 100, 5,800, 2,000, we get total assets of 47,000, comma, 100. Total assets. Now we're going to leave this line blank. Just because there's a row doesn't mean you need to fill it, because I didn't see any other assets that we forgot about. All right, so now we can do total liabilities. So we're going to add 24,600 plus 2,700 gives us 27,000, comma, 300. So you need to put the 27,300 underneath this horizontal black line, because this horizontal black line means we're doing some type of mathematical operation. In this case, we're adding these two numbers. Now we need capital. So Tarrant or Tarrant is the name of the owner. Remember now, we cannot use this 19,150 because up here it said the owner's equity is incorrect. So what we have to do is we have to back our way into the number. So remember, total assets are 47,100. So assuming that number is correct, that has to be the same number over here. And by the way, the label is total liabilities and owner's equity. Notice they screwed up the label over here. They just said total liabilities. Anyway, so I placed 47,100 here because that has to be the same amount as total assets. So now we have to do some math. Remember, this number is liabilities plus owner's equity. So liabilities plus owner's equity. So 27,300 plus what is 47,100. So we need to subtract those two numbers. So we got 47,100 minus 27,300 equals $19,800 of capital. And I think that looks good. So let me move this up and check my answer. Well done. So I hope you've learned from these homework exercises that it's critical to understand these three financial statement formulas. You need to memorize these. Hopefully you're getting enough practice that it comes easy to you.